Emily Chang, and you are watching Bloomberg Technology. Let's start with a check of your Bloomberg First Word news. Steve Mnuchin is expected to be named Donald Trump's Treasury Secretary as soon as Wednesday. This according to the New York Times, citing sources close to the transition. Mnuchin has deep roots on Wall Street and in Hollywood, but no government experience. Tennessee Senator Bob Corker was at Trump Tower today for a meeting with President-elect Trump. He's reportedly in the running for Secretary of State, along with former CIA Director, retired General David Petraeus, and former New York City Mayor Rudy Giuliani. The U.S. will not send a formal delegation to funeral services for Fidel Castro, according to White House spokesman Josh Earnest. Deputy National Security Advisor Ben Rhodes and Jeffrey De Laurentiis, the top U.S. diplomat in Cuba, will attend. And the two flight recorders from that deadly airplane crash in Colombia have been located. The country's Civil Aeronautics Agency says the recorders are in perfect condition. That could help determine what caused the British Aerospace 146 to crash. Only 6 of 81 people aboard survived. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries around the world. I'm Emily Chang, and this is Bloomberg. Bloomberg Technology is next. Chang, this is Bloomberg Technology. Coming up, Nasdaq CEO Bob Greifeld goes against the grain, saying that a Trump presidency will be good for the tech industry. That interview ahead. Plus, payment provider Stripe gets $150 million in funding and creates Ireland's youngest billionaires. Our exclusive interview with Stripe's CFO. And Focus on Energy Week continues. Here at Bloomberg, we will ask the CEO of solar company Sunrun if Trump's presidency puts the clean energy industry in danger. First to our lead. President-elect Trump has chosen Elaine Chao to lead the Department of Transportation. If confirmed by the Senate, Chao would take the reins from Transportation Secretary Anthony Foxx and inherit oversight of an industry that's seen record safety recalls and, of course, urgent efforts to regulate rapidly developing self-driving car technology, something Secretary Foxx spoke to us about several times.
We're at the early stages of a revolution in transportation technology, and piloting these automobiles in real time is going to be part of how we learn how to make them even safer over time.
So what does the choice of Elaine Chao mean for the U.S. self-driving car market? Joining us now to discuss, our Bloomberg Politics reporter, Kevin Cirilli in Washington. So, Kevin, first of all, let's start with Elaine Chao and her reputation. Obviously, somebody who served under both President Bushes. Why do you think Trump picked her?
Well, she is, of course, a former Bank of America executive. She, as you alluded to, was the former director of the Peace Corps and, of course, the former Department of Labor Secretary in the George W. Bush administration. And she happens to be married to Senate Majority Leader Mitch McConnell, the Kentucky Republican. So, you know, this is a political pick who is somewhat well known in Republican circles. But as far as her positions on infrastructure spending, for example, that's unclear at this point. And that, of course, is going to be one of the top priorities from a policy perspective that the Trump administration is going to want to pursue.
Right. Trump has a fairly ambitious infrastructure plan, at least as we've seen on his website, wanting to spend over $500 billion on the U.S. transportation network. What do we know, though, about his plans for driverless cars?
There isn't much to know right now, Emily, I'll be honest with you. And in fact, when you look at, in particular, Elaine Chao as this pick and where she stands on some of those more wonkier transportation issues that Secretary Foxx spent a lot of time dealing with during this current administration, we don't know. But here's what I can tell you. The Alliance of Automobile Manufacturers, which of course represents all of the large automobile manufacturing companies in the world, they put out a statement today. They called Elaine Chao a quote-unquote superb pick. So when you look at it from that perspective, the auto industry is viewing this as a win. And I can tell you that talking with sources on Capitol Hill, Democrats are not likely to put up a fight against Elaine Chao for her confirmation process.
So Hillary Clinton had said she planned to continue some of the policies that Secretary Fox put in place, for example, building out a wireless infrastructure so cars could communicate with one another. Do we know anything about Elaine Chao's record under the President Bush's that would give us any indication about how she might feel or approach new technology?
Well, she's been fairly receptive to new technology, particularly as it pertains from a financial standpoint, if you look at what happened during her tenure at the Department of Labor. But I would just argue that she's going to come at this from a free market perspective. She's going to come at this again when you look at the statements that have been coming out from some of these trade groups today, have all, from the business sector, have all been favorable for her. And, you know, I think that in terms of some of these more regulatory issues, people are taking a wait-and-see approach, but she's not, if you will, viewed to be politically hostile in any way. This is someone who is known in Washington circles. She provides certainty to the business community, and the business sectors, again today, reacting with confidence and certainty at the pick of Elaine Chao, which, by the way, was just made official just a couple minutes ago from the Trump transition office.
Right. Now, earlier today, Trump did nominate Georgia Congressman Tom Price for Secretary of Health and Human Services. You know, I've been talking to folks here in Silicon Valley about healthcare technology, health technology in general, and they've said that federal funding, especially from the National Institute of Health, is going to be very important in driving some of these initiatives forward. Any idea how the congressman or President-elect Trump feel about that kind of technology?
Well, this is where it gets interesting, right? Because, and you know this, just the fintech world and investments in financial technology have really dipped a little bit because of the political uncertainty following, of course, what happened with Brexit and the U.S. elections. But here's what I can tell you. Tom Price is a top surrogate for Donald Trump in the healthcare field. He was an early endorser of Donald Trump at a time when it wasn't politically popular to do so, if you will. And he is also the architect of the Republican alternative to the Affordable Care Act, of course, commonly referred to as Obamacare. And so where he stands on fintech and other things, unclear, to be honest with you. But he has consistently advocated against the funding requests of the Obama administration. I can also tell you that this signals that President-elect Trump is very adamant about repealing and replacing Obamacare, despite that 60 Minutes interview from a couple of weeks back where he appeared to moderate on several aspects of it. But this is a signal that his top rallying cry on the campaign trail to repeal and replace Obamacare is something he intends to follow through with very early on in his first term.
All right, our Bloomberg Politics reporter, Kevin Cirilli. Thanks so much, Kevin, for that update. We're obviously going to continue to follow cabinet appointments, potential cabinet appointments over the next several days. Coming up, we will be talking to the CFO of Stripe, William Gaybrick, the company just raising $150 million in its latest funding round, aiming for rapid growth. The company's strategy next. This is Bloomberg. Tomorrow on Bloomberg Tech, we'll sit down with Dheeraj Pandey, CEO of Nutanix, for an exclusive interview following their first earnings results since going public. Well, this year, Cyber Monday set a new record, according to Adobe Digital Insights. This signals a huge shift in consumer habits. Americans spent $3.45 billion Monday, a 12% increase from last year. Enter Stripe, the payment service that just raised $150 million, doubling its valuation to $9.2 billion. Its focus on online merchants gives it an edge over competitors as retail shifts away from traditional brick and mortar. William Gaybrick is the CFO of Stripe, joins me now for this exclusive interview. So congratulations. What do you plan to do with the money? I mean, is this going to go towards acquisitions, international expansion, runway?
Well, thanks for having me, Emily. As you know, Stripe is a software infrastructure platform for building an online business, and in particular for accepting payments. With this round, I don't think there's anything that we sort of ring-fence the capital for in particular. I think what has got investors really excited about Stripe is the momentum that we've carried through 2016. 2016 was the year of building for scale at Stripe, and scale has come. In particular, a lot of really big companies have been joining Stripe. SAP, Macy's, Bloomingdale's, Target, UNICEF have all joined the Stripe platform. In addition, we've opened up 4 new markets, France, Spain, Singapore, Japan, and launched a bunch of great new products. Products like Radar, that's a fraud product, and Atlas, which is for incorporating a business. And so I think as we look into 2017, the capital is really just to double down on those efforts, open up a bunch of new markets, and just be ready for the scale to come.
So you mentioned Bloomingdale's and Macy's. Cyber Monday spending up now 12%. How do you guys continue to monetize and capitalize on this trend?
Well, I think that, as you mentioned a second ago, up 12% year over year. Yesterday was a huge, huge day for Stripe users, and we see more and more commerce moving from offline to online. So Stripe is really about being an ally to startups and technology companies and giving them the tools to accelerate their businesses, to go global, to build marketplaces and platforms, and sort of pioneer new business models.
So $9 billion is double Square's market cap. Is the difference justified, and why?
Well, Stripe and Square are very different businesses. In fact, Square is a business that I greatly admire. It's a great business, but it serves a very different user base and is solving a very different problem. For Square, you're looking at the huge market of millions of small businesses across the country, largely offline, coffee shops, hair salons, things like that. Stripe, in turn, is very focused on technology companies. So these are often very high growth companies building businesses online and taking advantage of the new opportunities the internet creates.
So on that note, analysts estimate you guys processed $20 billion last year. What's the estimate or the forecast for this year, and how fast do you expect that number to grow?
Well, so as a private company, we don't report any financials right now. We haven't confirmed any numbers. As I mentioned a second ago, we are seeing a lot of great scale driven in particular by a lot of really large users joining Stripe.
So we've been talking a lot about the political situation. Obviously, you mentioned you guys have a lot of international efforts, international expansion happening. You have a partnership with Alipay in China. I know that you are now in Cuba as a result of the White House opening relations with Cuba. Now we have a president who says, president-elect, who says he wants to curb our trade relationship with China, potentially end the relationship with Cuba. Are you concerned at all about Stripe's business?
Well, as you note, Emily, earlier this year, when the president was making his historic trip down to Cuba, actually reached out to Stripe in particular to invite us down there. In fact, a lot of entrepreneurs on the ground in Cuba were asking for Stripe to be there because of our Atlas product. And Stripe will always be about economic inclusion. We're really about building the technologies to create a more economically interconnected world. What it means with the new administration joining, I'm not the expert to talk about policy or sort of macro conditions. What I can say is there's strong evidence that the new administration is quite pro-business, that job creation and stoking the economy in general is a priority, and so we're aligned, at least in that way.
So is it something that you guys are watching and following? I mean, obviously you've got interests in a lot of these countries that have now become really hot button issues.
I think it's something we're watching and following. It's something we'll know a lot more about in a few weeks.
So let's talk about international expansion. Where next?
Well, so we don't share our exact roadmap, but what I will say is that we're now in 25 countries, which means there's 171 countries that we are not in yet, and certainly some of those are harder to reach, but we have a very strong business in Europe and Southeast Asia, and we'll be doubling down on those regions.
You're often mentioned as the a forthcoming IPO candidate. Any update on when that is going to happen, and if the new political environment changes that?
So I don't think anything changes for us. We're very happy as a private company. Stripe is very, very capital efficient, which means we really have no need to rush to the public markets.
So last question, obviously, I've spoken to Patrick and John Carlson many times, founders of the company. The Bloomberg Billionaires Index now calculates they are Ireland's youngest billionaires. And I'm curious, I mean, obviously I have my own impression from interviewing them, but from your perspective, what sets them apart as leaders?
Well, I think John and Patrick have had from day one a really extraordinary vision for Stripe, and about Stripe being about more than just payments, but about enabling entrepreneurs to build huge businesses online. And so I think it's really that vision, the dedication, the passion, and perhaps most importantly, the long-term orientation that they bring that sets them apart.
All right, Will Gaybrick, CFO of Stripe, thanks so much for joining us today on the show. Great to have you. Well, Bob Greifeld has been running the show at Nasdaq for the last 13 years, helping to transform the company into a tech and data business. While many in the tech industry are cautious about President-elect Trump, Greifeld was more optimistic, speaking to the Bloomberg surveillance team earlier today.
Well, he has to understand that we're coming to the age of machine intelligence, machine learning, and big data that has the ability to change the employment profile of this country and really on a global basis in profound ways, and ways we haven't seen really since the Industrial Revolution.
But Bob, so that fits in perfectly with Donald Trump's vision of America. Is it back to what we saw 60 years ago, or does it have to be, what we saw in terms of manufacturing, but the 2.0 version?
Well, I would say this, that, with a lot of publicity about globalization and should we become more nationalistic or not. And certainly that's a topic to discuss and debate. But I think the changes in technology that are coming are the most important thing. And I think Mr. Trump and the rest of the administration will realize that and focus on that.
Bob, is this, we talk a lot about globalization displacing a lot of people and this leading to the election of Donald Trump. You could argue that actually it's technology that has displaced people because jobs have moved on, and if you don't retrain people, then you don't create quality jobs.
Well, I think jobs have moved to other jurisdictions because of lower wage, and that's a factor, and I think Donald Trump correctly recognized that. But I think the larger point is you have the ability to have machines represented the lowest cost wage possible. And you see machines are now getting to the point where they have manual dexterity. That's going to allow them to do many things that were previously thought impossible for machines to do. So we're going to have to deal with that reality. The clear and obvious example is self-driving cars. That will happen. What will that mean? What will that mean for jobs?
Right. What will that mean for jobs, Bob? Because this is, you're trying to do a circle out of a square. If Donald Trump wants to reflate in spending in infrastructure and bring back, I guess, to American job creation to the glory days, but you're dealing with advanced technology, how do you marry the two so that you create jobs whilst advancing the economy?
Well, I think they're parallel paths. So I think the path to bring jobs back to America is a good path, and I think we'll see progress there. And I do applaud his efforts there. But we have to recognize that path alone will not be sufficient. That technology by itself will be changing the nature of jobs in a profound way, and that change in the nature of jobs is going to be the biggest change we've seen since the Industrial Revolution.
Bob, from my childhood, it was the Mohawk Valley and the New York State Thruway, GE, Schenectady, Carrier, Syracuse. For you, I think of Iona College going up where international business machines reign supreme.
They did.
Again, that is the creative destruction. What do you observe at NASDAQ about job creation from all these startup companies today? I don't see it.
Well, the one thing I think we see is there is a shortage of workers today for high technology companies. So as much as we're talking about the machines replacing people, today, right, if you have a higher education degree in a STEM field, you have more job offers.
Do you see, is Mr. Ross, Secretary Ross of Commerce, is he going to initiate a smart immigration strategy to meet those job vacancies?
I believe when you look at what the president-elect has said, he said that if we have the need, we'll bring the people in. So I think President Trump will be good for technology companies. I think he'll have an enlightened policy with respect to H-1B. And certainly when you have, if you go to Silicon Valley and there's literally thousands of jobs openings that cannot be filled by Americans, the skills are not there, I think we'll have an enlightened policy to bring those workers in.
Bob Greifeld there, CEO of Nasdaq. Well, noted investor Whitney Tilson spoke on Bloomberg Television about his outlook on the markets and his investments, including his short position on Tesla. Although the Solar City deal took a big chunk out of the company's stock, Tilson is taking a cautious approach.
I'm so tempted to short it. I got destroyed shorting it last time on the big run up, from 30 to 200 or something. And it's made me cautious of shorting it, partly because I got burned before, but partly because you can construct the most perfect bear case on it about rising competition and the company's hemorrhaging money, and the Solar City acquisition is just going to add to their losses and certainly has added to their debt load, et cetera, et cetera.
Coming up, Facebook remains in the spotlight over fake news. Should the social network be held accountable? Axel Springer, CEO, weighs in. This is Bloomberg. Now to a story we are watching. German prosecutors are investigating Facebook CEO Mark Zuckerberg and a number of other executives after complaints of hate speech. Lawyer Chanjo Jun claims the social network acted unlawfully by failing to remove posts that incite hatred or violence. Jun provides examples of hundreds of posts denying the Holocaust, calling for violence, and expressing support for terror groups. Facebook said, quote, "The allegations lack merit." Meantime, the CEO of Axel Springer, one of the biggest media companies in Europe, said politicians should resist calls to regulate Facebook as a media company. This despite concerns surrounding fake news on the social network during the U.S. election. Matthias Dopfner made the comments in an exclusive interview with Bloomberg. Take a listen.
I think it is a tremendous distribution platform. I really stick to Mark Zuckerberg's philosophy that it is about connecting people. So it is a platform a bit like a telco in the old days. It brings people together, it facilitates communication. Perhaps in a couple of years it will be virtual reality conversations that we have on Facebook. But Facebook is a technology company and a platform. It's not a publisher. It is not a content producer. It takes no responsibility for content, and it should not take responsibility for content. I think it's a totally misleading debate. You cannot blame people what they have shared during a telephone conversation. So the only restriction for Facebook, I think, should be the rule of law. What is against the Constitution, what brings people into jail, that cannot be published on Facebook. But I think the whole idea that they should have a kind of super editor, that would then transform Facebook into a global media monopoly. And that's really going to a wrong direction from various points of view.
Matthias Dopfner there, CEO of Axel Springer. Coming up, we dive into our week-long focus on energy with Sunrun CEO Lynn Jurich. What a Trump presidency means for solar. This is Bloomberg.
I'm Christine Harvey, and you're watching Bloomberg Technology. Let's begin with a check of your Bloomberg First Word news. President-elect Donald Trump plans to name billionaire Wilbur Ross Commerce Secretary as soon as tomorrow. That's according to NBC. 78-year-old Ross was a longtime Democrat who turned conservative. He backed Republican presidential nominee Mitt Romney in 2012. House Speaker Paul Ryan is rejecting President-elect Donald Trump's talk of voter fraud and independent Jill Stein's recount effort. Ryan said he didn't see any evidence of systemic fraud. Trump has claimed without evidence that millions voted illegally in 3 states that Hillary Clinton won: California, New Hampshire, and Virginia. Well, wildfires fueled by high winds are sweeping through Tennessee, including parts of the Great Smoky Mountains. 3 people have died and thousands have been forced from their homes. The Pentagon has found no misconduct in a mistaken airstrike that killed dozens of Syria-aligned forces in September. The U.S. Central Command determined the forces were incorrectly identified as Islamic State fighters. The investigation also found intelligence and communications mishaps. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Christine Harvey. This is Bloomberg. It's just after 7:30 a.m. Wednesday morning here in Hong Kong, 10:30 a.m. Wednesday in Sydney. I'm joined by Bloomberg's Paul Allen with a look at the markets. Paul, good morning.
Good morning, Christine. ASX has been trading for about 35 minutes now, and it's off about 0.1% at the moment. Perhaps not surprisingly, it is the resources space that's feeling most of the heat right now. This is after the iron ore price snapped 5 days of gains. It's down about 4.5% overnight to back under $80 per tonne. Take a look at Fortescue Metals, one of the worst performers, down 3.5% right now. Have a look at Ardent Leisure as well. That's off or about 0.5% as well. This is after news today that it plans to reopen its Dreamworld Leisure Park on December the 10th. This is after 4 people were killed back in October on the Thunder River Rapids rise. Ardent saying it will book no revenue for the month of November and a one-time charge of $1.5 million. Elsewhere around the region, Nikkei futures looking mixed right now. We're waiting on Japan industrial production numbers for October. That's expected to come in flat to give us a figure of minus 1.3% on year. And over in New Zealand, the NZX, a little ray of sunshine right now. It's up ever so slightly after 90 minutes of trade. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Here on Bloomberg, we are focusing in on energy this week. First up is solar. In the weeks following Donald Trump's election, there's been endless speculation about what the future of solar energy will look like in the United States. Trump campaigned on promises to bring back coal mining jobs and scrap President Obama's clean energy initiatives. Some of those initiatives helped scale up the use of solar energy, which increased 30-fold under Obama. Solar jobs growing 12 times faster than the rest of the economy. Joining us now to discuss the road ahead for the industry, Sunrun co-founder and CEO Lynn Jurich, and with us from New York, our Bloomberg editor-at-large, Corey Johnson. Lynn, thank you so much for joining us. So Donald Trump is a guy who has indicated that maybe climate change is a hoax. How concerned are you about your company's future and the future of the industry under President-elect Trump?
You know, I'm not concerned at all. Renewables are absolutely here to stay. The cost performance is just there, and the people want it. And just to highlight what voters wanted, if we look at the federal election, where the energy policy gets set is really more at that state level. And there were 2 places where there was a voting based on rooftop solar, and that was in Florida and that was in Nevada, excuse me. And in Florida, the same voters that elected Trump and Rubio also voted to keep rooftop solar into the state. So you're actually seeing that rooftop solar is very of the moment. It creates the jobs people want, the domestic jobs. It brings affordable solar energy to people, and it brings competition. And that's a very bipartisan set of characteristics.
Okay, but there's still some question about how Donald Trump feels about it. Let's take a listen. He hasn't said very much since being elected, but let's take a listen to one thing he did say.
On energy, I will cancel job-killing restrictions on the production of American energy, including shale energy and clean coal, creating many millions of high-paying jobs. That's what we want. That's what we've been waiting for.
When you hear him say that, when you hear concern about tax credits getting rolled back, I mean, what's your response?
Well, I think first what he's saying is we're investing in infrastructure and we're investing in jobs. And we're investing in domestic jobs. And that's precisely what we're doing. So as you're saying, as you said in the opening comments, the jobs in solar are growing 12 times that of the rest of the economy. And so I see it very consistent with his message. The other benefit about the rooftop solar is that what we're really competing with is the price of retail power. And that's why it's so efficient and why we'll win long term. It just makes sense to use the existing rooftop infrastructure and to produce the power where it's delivered. So we're not really competing with the centralized power sources. We're competing with the whole cost to actually transmit them over to the home. Now, on to the tax credits. I will say that the tax credit was a policy that was extended under a Republican-led Congress. That was a George Bush era policy. It sunsets after 4 to 5 years, and that's what's so great about this industry is that our cost reductions that we are realizing make it so that to subsidize this industry makes a ton of sense. It's working. It's creating the jobs and it's bringing the savings to people.
Hey, Lynn, I wonder if we will sort of drill down. I buy your argument that the state policy has tended to drive solar more than federal. But when I look at what's happening with your company and places that maybe you're succeeding and others aren't, I have trouble distinguishing between the companies. Solar City, in point of fact, right, has massively cut their guidance towards how many megawatts they're going to install. They operate in many of the same markets where Sunrun is, and you guys have not cut that. And I wonder how you're seeing the world differently from they are.
Well, the benefit of our industry is that we have a available market size that is vastly beyond where we are today. So if you just look at U.S. households, we're penetrated 2-3%. But when you actually look out over 10 years with the cost reductions we're expecting, that can be 20%, which means that we would deliver a 20% annual growth rate over 10 years. I've been very consistent to say that this industry can sustain that. Now, during that time period, there can be companies that get over-levered. There can be companies that get in trouble. But one of the things that I'm most proud of now is, it's our 6th quarter being public, and we've delivered nice, strong, consistent growth. And if you look at our performance year to date, we are 50% year over year in terms of the number of megawatts that we've installed.
Now, the Tesla Solar City merger has been approved. How does this impact you? Does a bigger, more diverse, more end-to-end Tesla give them more power?
I applaud the merger. I think it's very good for the industry. We are operating in a $400 billion annual industry. That's what retail energy is. We welcome the innovation. We welcome strong companies. We welcome strong brands to educate consumers that rooftop solar is here. It's inevitable. It's a good choice for the home. So I think it will lift all boats, and we welcome them in the industry.
Well, to that point, with how well you guys are doing, on my Bloomberg terminal, I've got the Sunrun stock chart, but maybe more importantly, if we go into the terminal, we can, just by typing FACF, we look at your cash flow statement, we scroll through your cash flow statement, and we get to a beautiful, beautiful free cash flow chart, or maybe not so much. You're going through a lot of free cash flow here. Big losses, a little bit better than it has been, but how do you intend to reduce the free cash flow burn that you guys have been in for such a long time here?
It's interesting. We've held our cash balance flat at $200 million for over 4 quarters. So if you actually look at that cash balance, it is held flat. And not only have we done that, but we've delivered that while we've grown the business. Last year, we grew the business 80%. Again, this year it was 50%. So we're investing in that growth. We're investing in policy. We're investing in R&D. We have a lot of exciting things happening in terms of how we're incorporating storage into the panels. And we're holding our cash balance steady. So what you're seeing is very strong contribution margins for every one of the new solar companies that we acquire.
One more question on Trump. You've now got a partnership with a big Korean company that makes lithium-ion home batteries, and you're going to help supply them. When it comes to issues like curbing trade, which he has also discussed, will that affect you guys?
There are a number of suppliers in the storage market, and that's one of the things we're most encouraged of is the price in that market has declined so significantly. And so one of the criticisms of rooftop solar has been, well, what happens when the grid can't take more exported power? Well, if the grid can't take more exported power, or it's more attractive to store it, you put the battery on the system with the panels, and you actually hold that power and consume it at night or consume it at a time during the day where power is more expensive. Tons of innovation happening there, tons of suppliers. Tesla continues to be a supplier of ours, as does LG and other companies that we're seeking partnerships with.
All right, Lynn Jurich, CEO of Sunrun, thank you so much for joining us. Always great to have you here on the show, as well as our editor-at-large, Corey Johnson, joining from New York. Don't forget to tune in all week long. Our focus on energy continues on Bloomberg Television. Now, a story we are watching. Uber is trying to convince Europe's highest court that it is not a taxi service. 15 judges at the European court will decide whether Uber is an app or a a transportation company, a question that has long vexed regulators and lawmakers across the region. A final ruling by the EU could still be months away. Meantime, overseas, in the United States, Uber drivers are taking part in a day of disruption, the latest push in the fight for a $15 minimum wage. According to the group organizing the effort, hundreds of Uber drivers and other employees will take part in cities including New York, San Francisco, and Boston. Massachusetts Senator Elizabeth Warren weighed in on Twitter saying, quote, "No one who works full-time should live in poverty, not fast food workers, Uber drivers, or hardworking folks at Boston Logan. Hashtag Fight for 15. Coming up, as Alibaba affiliate Ant Financial preps for an expected IPO in 2017, we sit down with Alipay President and Senior Vice President Douglas Feagin. That's next. Ant Financial is working to increase its footprint beyond China. The operator of mainland China's top mobile payment service, Alipay, partnered with New York-based First Data last month. Part of its appeal is adding more social features to the Alipay app. Joining me here in the studio, Ant Financial Senior Vice President Douglas Feagin. Doug, thank you so much for joining us. Great to have you. You're in town to talk about plans for global expansion beyond Asia. How are those plans going, and how do you plan to make it happen?
Well, it's a big world out there, and we're very blessed to have a very big user base in China, 450 million active users in China. And our first step in the global expansion is to serve those consumers as they travel abroad. And they look to shop, they look to be tourists in all sorts of destinations, and we look to serve them. And today we're very pleased that Alipay is accepted in over 80 countries around the world. And so when those Chinese consumers travel abroad, we can serve them.
Now, Ant Financial is made up of more than just Alipay. There are 5 different sectors. Give us a quick explainer.
Yes, we started as a payments business 12 years ago. We've expanded beyond that to where today we do lending to both small and medium-sized enterprises as well as consumers. We also offer insurance products, and we offer a credit scoring product. And we're expanding into multiple different services like Kobe, which is an O2O service where we provide users with an ability to do things like to find a place to dine or to order in food.
So there are reports that Ant will be going public next year. I know you can't discuss any specifics, but any updates on time, place, growth targets?
No updates at this point. I think we see the benefits of being a public company, but we don't have specific plans as to timetable or venue at this point.
And have you guys been watching? Obviously, there's been a lot going on with the election, following the political climate, and some of President-elect Trump's potential plans for the relationship between the United States and China. Any concern?
No particular concerns. I think we're very focused on our consumers and just what we can do to serve them. And it really is increasingly a global consumer base now with our joint venture in Paytm in India, with Send Money in Thailand. And so we are building that global business, which we think will do well in all sorts of different political environments. So we really focus on those aspects of business.
Now, over the last few days, there's been some controversy around Alipay. There's an attempt to add some social networking features called circles. There ended up being a lot of photos of scantily clad women posted who were supposedly looking for wealthy boyfriends. Other users were divided into groups based on their credit score. There was a big backlash. Do you think that those features crossed the line? Do you think that there's been damage to the brand as a result?
Look, we take our network seriously and our application, and we're really focused on serving the consumers, and social aspects are a part of what we do to serve those consumers. As it relates to these situations, any inappropriate content has been taken down. Any of those circles have been closed if there was anything that was created inappropriately in them. So we think we've put that behind us and put that to bed.
So what other social networking type features might you consider adding?
Well, we have various different social aspects to the business, because as we started as just a payments tool and then provide a much broader range of services, we want to engage our users to think about what they can do every day when they shop, dine, purchase for things. And so we want our users to be able to share that information amongst themselves and to share it with merchants. And so there are a whole host of aspects of Alipay that allow those users to share that information with each other and with merchants, and the merchants back to our consumers. So things like circles will continue to expand, and we want to have greater user engagement so that our users feel more comfortable using the app and want to use it more and more each day.
So last quick question, how do you see the competitive landscape changing, especially in China, when it comes to fintech, when you see the moves that companies like JD and Tencent are making?
Well, it's a competitive landscape for payments globally, and it will be, it certainly is in China. We continue to see innovation. One of the great things about our model is that we're an open ecosystem. So we work with all different providers of financial services, all different intermediaries, and we bring kind of the best practices of all those different groups to the Alipay app and to our partners' apps in these other countries. And so we think that approach to our business will enable us to continue to innovate and continue to build user engagement over time in spite of strong competition.
All right, Doug Feagin, Senior Vice President, Ant Financial, thanks so much for stopping by while you're in town.
Thank you very much, Emily.
Up next, a new fund aims to back the world's most innovative aerospace technology. We'll focus on the state of space startups next. In this edition of Out of This World, Starburst Accelerator has just raised a $200 million fund to invest in early-stage aerospace startups over the next 3 years. It's an extension of what Starburst already does to help aviation and space tech startups raise seed money and partner up with industry giants like Boeing, Raytheon, Northrop Grumman. Joining us now to discuss the state of the aerospace startup industry and funding is Starburst Accelerator CEO Francois Chopard. Francois, thank you so much for joining us back on the show.
Thank you.
Great to have you back.
Yeah.
So you've said you're focused on deep tech startups addressing aviation and aerospace. What exactly does that mean? What kind of technologies are you looking for?
So it's a large number of technology, both that are related to either CubeSats or launchers, or even flying cars, supersonic jets, but also enabling technologies like new type of materials, batteries, fuel cells, sensors, that type of stuff. So, yeah.
And the plan is to make a lot of investments at a smaller rate, $3 to $5 million, right?
Exactly,
So
yeah.
I'm curious, how far does $3 or $5 million go in an aerospace startup? Biotech investors will tell you it has to be at least $20 million to make even a small difference.
So basically, it's the first stage. Right? It's going to be Series A investment. There've been already quite some success with this type of investment and this type of startups. And so basically, we are looking at startups that are 3 to 4 years of existence, and that will help go from a prototype to a more mature product and help them address a larger and a broader market.
So are these very capital-intensive types of businesses?
Some could be, yes. Some will be a bit less, but it's like the first major investment before a Series B and Series C, where we'll see rounds more around 30, 40, 50 million of investment.
You've said space tech is today where biotech was 15 years ago. What do you mean by that?
Aerospace, basically. And so what we've seen from the large corporate players is that they are more and more looking outside their traditional R&D center for innovation. We've seen that in that industry, more and more technology are not the legacy technology from the aerospace industry. And so they are more and more looking outside of their boundaries to look for new technologies, smaller team, more agile, to integrate into either their product or their organization to bring on the market more innovation.
Now, you've also said that the U.S. is the best place to work on an aerospace startup. And I wonder about space in particular, because there was a decades-long break when it comes to at least federal funding, federal investment in space. The White House has just re-embraced it. And I wonder, will it still be the best place under President Trump?
So, what we've seen regardless of the president, is that both the NASA administration, the OSTP from the White House, they have been very keen and very proactive in putting the U.S. money on the right bets. And so, what we've seen is that more and more money, even from NASA, is going on small venture and small startups.
We just did a really interesting story yesterday about how China is investing more in space. Of course, there's also Russia. The U.S. cooperates with China and Russia more than they have in the past when it comes to space. But I wonder if, for example, the new White House pulls back on space investment, will that open a dangerous door? Could China and Russia get ahead in a way that is not good for the United States?
Regarding the current situation, I don't think that the White House will reduce their investment in space. I don't see that coming. I think it's going to be more the opposite. Space will still be a very strategic place to be in and to be ahead of the others, whether it's for satellite or any type of observation or communication technology.
Interesting. Well, congratulations on the fund. Francois Chopard, Starburst Accelerator CEO. Thanks so much for stopping by.
Thank you.
Well, it is an engineering feat decades in the making. A structure has been laid over reactor number 4 at Chernobyl, 30 years after the worst nuclear disaster in history. The shelter is said to be the largest land-based movable object ever made, designed to prevent radiation leaks at the site. Over the coming year, using remote-controlled cranes will work to make it airtight and dismantle parts inside. It's supposed to be completely finished November 2017 and should be airtight for 100 years. And that does it for this edition of Bloomberg Technology. Tomorrow we will sit down with Dheeraj Pandey, CEO of Nutanix, for an exclusive interview after their first earnings results since IPO. And remember, all episodes of Bloomberg Tech live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays in New York, 3 p.m. in San Francisco. That is all for today. This is Bloomberg.